Hello and welcome to Stockwatch, presented by me, Evan Lucas for Go Market Securities. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature, not relied upon as any form of personal advice. Go Market Securities does not know your personal scenario, nor your personal financial goals, and therefore none are relied upon as any form of advice at all. It is just general in nature only. Continuing on with our previews leading into earnings season, and unfortunately I'm going to do the one that is going to probably be the downer, and that is discretionary stocks. We saw about 6 to 8 weeks ago all of the data start to really show the pressure that they're under. They came out with quarter numbers and they're averaging between 7 and 12% down year on year. But it does also get specific around stocks. You listen to a JB Hi-Fi, for example, they're doing okay, but not great. Then you look into a Harvey Norman and they're really under quite a lot of pressure. You look online, Temple and Webster too, telling you something similar. Nick Scali, those kinds of players. So anything around sort of the old working from home trade that we saw in 2020 and 2021, that clearly is drying up and drying up quite rapidly, which is the area of the part that we can probably all do without. You know, the discretionary item that is around the home that probably could be done in a period outside of high inflation and high interest rates. They're the parts of the discretionary space that's really under pressure. The next one that's interesting is things like apparel. Apparel is variable across the numbers. Online's doing somewhat okay, which is not unsurprising considering we still like to spend. There's still signs that spending is going okay, but bricks and mortar is hurting. It's not listed anymore, but the good example is David Jones, and David Jones has seen a 40% decline in some of their stores. So we watch Myer with interest in terms of how that sits. It's not all doom and gloom, and I want to point that out there very clearly. It's not all doom and gloom around it. If you listen to CommBank's Household Spending Index and their overall survey, parts and discretionary are okay. So anything exposed to restaurants, cafes, anything around travel and experience, they've actually seen an increase, which has offset the loss that I just explained that's going on in consumption of actual products. And therefore, keep an eye on things like Ardent Leisure, which may actually do better than expected. Keep an eye on those kinds of things, Aristocrat as well, that may actually slightly do better than expected. Not by much, but because, again, at the moment, people clearly value a now and an experience that they can justify the cost rather than an item that they probably could have or should have bought during the COVID period and are now sitting on their hands with.